Hello friends, welcome back to the fourth Bollinger Band strategy of this course. Now this is a very unique strategy where we will use two Bollinger Bands and Bollinger Squeeze for our entry and exit. Now the strategy is pretty simple. Let's see the rules for this trading setup. Now the best period for this trading setup is 1 hour and above. Then we have to insert two Bollinger Bands, first with a 3 standard deviation parameter and second with a 0.5 standard deviation parameter. After this, we have to look out for the Bollinger Squeeze of 3 standard deviation Bollinger Band. Now this step is very important. After this, mark a box around the period of consolidation which is represented by the squeeze. Now the trick here is to take the help of highs and lows of the candles to mark this box of consolidation. After this, a long green candle in case of long trades or red candle in case of short trades, breaking the box of consolidation indicates breakout, and we will take our entry at the next candle of this breakout candle. Finally, our exit will be at the low band of this 0.5 standard deviation Bollinger Band in case of long trades and vice versa. Now friends, if the steps are not clear at this point, then please don't worry. Next we will do some practical examples that will make the steps crystal clear. So this is the first chart of Nifty Bank, and as you can see, a period of consolidation here. But before that, insert a 0.5 standard deviation Bollinger Band and a 3 standard deviation Bollinger Band. Now please note this central moving average line of both 0.5 standard deviation Bollinger Band and 3 standard deviation Bollinger Band will overlap each other since the period is same for both. Now in this chart, Bollinger Bands are in yellow for 0.5 standard deviation Bollinger Band and bands are blue for 3 standard deviation Bollinger Band. So after identification of contraction of 3 standard deviation Bollinger Band, we will mark a box around this period of consolidation. Friends, for this we will take the help of highs and lows of candles in that phase and marks an approximate box so that all the candles are covered in that box. So this box of consolidation represents the entire price action of the ongoing squeeze period. Next we will wait for a long breakout candle that breaks either up or down and then take the trade long or short accordingly. So you can see in this case we have a long green candle breaking out of this box in upward direction. So we will take a long trade at next opening candle, that is here. Finally, our target will be this lower band of 0.5 standard deviation Bollinger Band which got hit here. Friends, we don't use any special stop loss for this setup since we anyhow exit at the lower band of 0.5 standard deviation Bollinger Band. I hope this setup is clear to you. Now, some questions must be arising in your mind that how to judge when to make a box or how many candles to consider while making this box or when this box ends, so that we can consider our breakout candle. We could have make our box till this big red candle as well and then take it as a breakout, isn't it? So friends, the simple thumb rule you can use to make this box is to include minimum 20 candles from the start of the squeeze. While backtesting, I have found that 20 candles is a sufficient price action for making this breakout box. And please note, if market before the Bollinger Band squeeze is sideways, then you can also consider those candles as well for making this box. But end of box is marked simply by counting minimum 20 candles from start of the squeeze. Now please re-listen this statement again, that if market before the squeeze is sideways, then you can also consider those candles while making this box, but end of box is simply marked by counting minimum 20 candles from start of the squeeze. I hope this important point is clear to you. Next, let's see another example. Now this is hourly Euro USD currency pair, and please notice the squeeze in Bollinger Bands here. So just count 20 candles from start of the squeeze for making the box. Now 20 candles are till here and we will take entry only after this. But for the best results, you can also consider the previous candles from where this actual sideways movement started. That is from here for marking highs and lows of the box of consolidation. And please note, since Bollinger Band is a lagging indicator, most often the sideways movement has already started before the actual squeeze. So for the best results, you can also consider these candles as well. But there must be minimum 20 candles from the start of the squeeze. I hope your doubt is clear. In case breakout happens before these 20 candles, then no worries, we can look out for some other trading opportunity. So breakout happened here at this long green candle, and we will take our entry at this candle, and exit is here at the lower band of 0.5 standard deviation Bollinger band. So friends, I hope the strategy is clear to you. The setup is simple but effective only if you master this box on your charts. Let's see a final example before winding up this lecture. Now this is again hourly Euro USD chart, and please notice this squeeze here. Again we will wait for 20 candles from start of the squeeze for making our breakout box. 20 candles are till here, and while making the box as seen earlier, we will also consider previous sideways movement as well. So our actual box will be this. Friends, I hope you understood how we are getting the highs and lows of the box. We are taking the help of the candles in between and marking the box such that whole price action is encapsulated between the box. Finally, we have our breakout of this box here. Friends, after 20th candle, we will keep extending this box and wait for our breakout. And as you can see, this was a good profitable trade, and we exited at the upper band of 0.5 standard deviation Bollinger band. So friends, with this I wind up this lecture. I hope the strategy was clear to you.